The biggest single Tesla number of the quarter lands in the next few days. Tesla reports its second quarter production and delivery figures on Tuesday or Wednesday. And that print will settle an argument that's been running for weeks, whether demand is genuinely softening or whether the bears have been wrong. We've also got a Tesla and SpaceX merger debate that just picked up an actual timeline. The first official Cybercab specification published over the weekend. 3 separate energy deals in a single week. And Europe splitting in 2 directions on full self-driving. This is the Tesla Brief. The week ahead, Sunday, June 28th. Welcome to the show. Tesla finished Friday near $380, down 5.2% on the week. Just behind the Nasdaq's 4.6, and well behind the S&P 500's too. So this was a broad tech sell-off that hit Tesla hardest. Let's start with the week that just finished. The move that defined the week wasn't anything Tesla did. It was a broad tech sell-off on Tuesday that knocked the stock down about 5.5% in a single session. Harder than the Nasdaq fell. And that matters for a specific reason. Tesla has spent the last month being reassessed by parts of the market as an artificial intelligence company. The chips, the robotaxi software, the energy infrastructure. When the whole AI trade gets sold off, a stock that's been lifted by that narrative falls with it, and usually by more. So Tuesday was a reminder that being an AI stock cuts both ways. The back half of the week gave the bulls something concrete to point at. And it came from the part of Tesla people pay the least attention to, the energy business. In the space of 1 week, Tesla signed 3 separate deals. The biggest was a 16-gigawatt virtual power plant deal with Sunrun and Renew Home. A virtual power plant is worth pausing on because it's a genuinely clever idea. Instead of building one giant power station, you take the batteries already sitting in millions of homes, Tesla Powerwalls. Then you link them together with software, so the grid can draw on all of them at once during peak demand. This deal pulls together roughly 4 million homes, and it's worth something like $1.6 billion a year, which works out to about $400 per home. And here's the part getting the most attention. A widely followed independent analyst argued over the weekend that the real value of a deal like this isn't the revenue at all. It's leverage. If Tesla can offer a utility a big chunk of grid-stabilizing battery capacity, it can ask for something back. Faster permitting for the AI data centers everyone is racing to build right now. Data center permits are one of the biggest bottlenecks in the whole AI build-out. So, the argument is that Tesla's batteries become a bargaining chip for data center access. That's a thesis, not a fact. It depends on a utility actually trading battery capacity for a permit, and that hasn't happened yet. But it reframes the energy book from a low-margin storage business into something more strategic. On top of the virtual power plant, Tesla also signed a $5 billion Megapack order in Europe and a 2.8 gigawatt-hour battery deal in Belgium, the second European energy contract in 3 days. The other story that ran all week was the Tesla and SpaceX merger debate, which has quietly moved from a joke to something with an actual timeline. A couple of things made it concrete. Earlier in the month, Elon Musk crossed 20% of Tesla's voting power. And 20% is roughly the threshold that makes a founder-led structural deal practical. Then SpaceX did a bond sale, which got investors thinking about the two companies' finances as one combined picture, rather than 2 separate stories. And over the weekend, that same independent analyst laid out the piece nobody had quite named. An antitrust clock. His argument runs like this. SpaceX's artificial intelligence revenue is growing extremely fast. He projects something like $46 billion this year, and $180 billion by the end of 2027. That would be larger than Tesla's entire revenue today. His claim is that if Tesla and SpaceX each independently become dominant in AI, regulators would block any future merger on competition grounds. So the window to combine them is now, while both are big, but not yet untouchable. Now it's worth being clear about what that is. Those revenue numbers are one analyst's projection, not anything Tesla or SpaceX has confirmed. And the gap between the projection and the AI revenue Tesla actually reports today is large. The retail community spent the weekend treating that projection as close to certain, which it isn't. But the underlying point is a genuinely useful way to think about it. The timing question and the legal question point in opposite directions. The case for waiting until both companies are proven and merging from strength is exactly the case that could get the deal blocked. The third thread was Cybercab, and here there was real, concrete progress over the weekend. Tesla published its first responders guide for the Cybercab, the official document that fire departments, police, and paramedics use when they arrive at one. And that document tells you more than any product reveal would, because companies don't write first responder guides for vehicles that aren't about to be on public roads in front of ordinary people. The guide confirms a lot of things that had only been rumored. The production Cybercab has no steering wheel and no pedals as the default. It has 10 airbags, a dual 400-volt and 48-volt battery setup, and 2 redundant emergency loops for first responders. It's rated for all public roads in light to moderate rain, fog, and snow. And it's designed to pull over and call Tesla's Robotaxi support if it loses its connection or hits extreme weather mid-ride. In the document's own words, quote, "When in autonomous mode, the vehicle is designed to be capable of performing the entire dynamic driving task without any input from a human driver." The detail in there: emergency mechanical releases on the door handles, exterior speakers so support staff can talk to people through the car, isn't marketing. It's the paperwork a city asks for before it lets a driverless vehicle operate on its streets. And the same weekend, footage circulated of a Cybercab with no steering wheel running the Giga Texas test track on its own. The documentation and the visual arriving together is the kind of coordinated cadence that suggests a customer-facing launch is closer than most analysts have modeled. One more thread worth flagging, because it cuts the other way. In Europe, the regulatory picture on full self-driving keeps getting more complicated. Sweden urged the EU to reject full self-driving authorization, the second northern European country to push back, and the Dutch regulator kept up its own resistance. But Finland went the other way and warmed to it. So the simple "Europe is closing the door" story isn't quite right. The bloc is split, the EU has to land on one answer eventually, and that makes this a negotiation rather than a verdict. The kind of situation where Tesla's lobbying behavior starts to matter as much as the rule itself. Now to the week ahead, and it's dominated by one event. On Tuesday or Wednesday, Tesla reports its second quarter production and delivery numbers. This is the single biggest Tesla data point of the quarter, and it's the thing that settles the demand argument that's been simmering for weeks. Here's the setup going in. The bulls have 2 things to point to. Goldman lifted its delivery forecast above the broader Wall Street prediction earlier in the cycle, which raises the bar Tesla has to clear. And Berlin output climbed to about 7,500 cars a week during the quarter, which suggests supply was running hot. Elon Musk, for his part, called the idea of a demand shortfall, his word, insane. The bears point to a long history of price cuts and argue that strong production into soft demand just builds unsold inventory. So what actually matters in the number? A delivery figure clearly above the Wall Street consensus would validate Goldman's call and take a lot of wind out of the demand shortfall story. A number that comes in soft, especially if production ran well ahead of deliveries, which would mean cars piling up unsold, would hand the bears their evidence. The market won't just read the headline figure. It'll read the gap between what Tesla built and what it actually delivered. That gap is the tell. Landing the same day is a competitive print worth watching alongside it. BYD reports its June deliveries. BYD is Tesla's biggest rival in electric vehicles globally. And the question each quarter is whether the growth gap between the two is widening or narrowing. Reading the 2 prints side by side tells you more than either does alone. Before either of those on Monday, we get China's weekly insurance registration data for the prior week. That's the most current read we have on Chinese demand, and the last meaningful China signal before the quarterly print. If those weekly numbers are holding their trajectory, it supports the bullish setup heading into Tuesday. Then on Thursday morning, the US jobs report, and it matters more than usual for Tesla right now. The new Fed chair signaled at his first meeting that a rate hike is more likely than a cut, which is an unusual stance. A hot jobs number gives him cover to hike, which tends to pressure a stock like Tesla. A soft one eases that. It's the first big labor read since that hawkish turn. And on Friday, US markets are closed for the Independence Day holiday, so the trading week is short. Looking a little further out, the Q2 earnings call itself comes in late July. And that's where Tesla would put guidance behind Cybercab's commercial timing and the start of Optimus robot production, which Musk has pointed to for the late July to August window. But this week is about the delivery number. And that's really the frame to hold. Everything else right now, the merger debate, the AI revenue case, even the Cybercab launch timing, gets read through that print. The question on Tuesday is simple. Does the number confirm Goldman's above-street call and back up Musk's rebuttal to the bears? Or does it hand the demand shortfall camp the evidence they've been waiting for? A strong print quiets the demand bears and lets the bigger AI story breathe. A weak one, and the demand argument is right back at the center of everything. That's the Tesla brief for today. If it's been useful, please subscribe. Thanks for joining us, and we'll see you in the next episode.